Okay, life insurance. Life insurance, it's not your grandpa's life insurance. Life insurance is very exciting. It is. It's very exciting. Okay? Because it does a lot more than what you think. It really, I'm serious. I'm serious. I did commodities. I was a commodities broker, stock broker. I was a certified annuity advisor, a life and health, and all this kind of stuff. And life insurance does some pretty neat things. I'm going to tell you about it in a few minutes. But it depends on, someone will ask me, well, what kind should I get? I said, I don't know, what are you trying to do? So we really do talk to people about what's important to them, and if that makes sense. It might not make sense at all, but you need to understand how it works. So, no kidding. Here's one main thing you need to know about life insurance is the cost has come down over the years. Because we're living longer, it costs less. They redid something called mortality tables that kind of project how long, all those actuaries out there calculating everything, they think how long you're going to live. Well, we're living longer, so life insurance costs have come down. So it's better than it used to be years ago. So that's kind of a good thing to know. We can get like a young person, say 25, $250,000 for maybe $12 a month if they're healthy. So it's pretty inexpensive. It's pretty neat. But there's two types. Term, and that's temporary. It's like renting insurance. And you might get term, or you might not, you might get term if you have someone that's dependent on you for a period of time. Like if you have kids, that's a real, they're dependent on you. We sell a lot of 20-year term insurance because they want to make sure, well, I've had little kids, I want to make sure they get off on their own and fly the coop and then I don't need it anymore, but they were dependent on me at the time. It's very inexpensive when you're young. It's very inexpensive. When you're young and healthy, you can't afford it when you're in your 60s, 70s, 80s, or if you have some medical issues. It's too expensive then. So if you want, again, it's for younger folks to prevent, in case there's an untimely death kind of thing. But you get it from 5 to 30 years. Depending on what you need, you might want to have it pay off a mortgage kind of thing. So you might want to do it as long as your mortgage. So there's different reasons why you might want to have it. You might want to pay off bills. Something happens to you. You might want to pay off the house, pay bills, have enough money for your kids to go to college, supplement an income that's gone. There's different reasons. And if none of those reasons make sense for you, then you don't need it. But generally, if you have a dependent, you might want to have that. And again, it's like renting, because when the term is up, term of 20 years, it's gone. But it was really, really important to have it during that time if something happened to someone, because then it could be devastating to a family if the breadwinner now is not around. So it's inexpensive when you're young and healthy, basically. And this is what I tell young folks too. It creates an instant estate while you're building your own. Right? So all you got to do is fill out some paperwork, sign, give a check, and you're worth that. Something happens to your family is set, kind of thing. So, and again, the prices have come down. So it depends if you have someone dependent. If you don't, some people, they get it on spouses and all, and that might be something. So you think about these things if it makes sense, or maybe you already have some. If you have life insurance that's a few years old, you might want to check pricing, because we do shop really well for that, and a lot of it has come down. And there's a certain kind of term, the only kind of term life insurance we sell is the type that can be convertible to permanent later on, and that's really, really important. Because you have choices later on if you want to extend it longer than the term, and it gives you options, kind of thing. So you can look at that, but we can reprice if you have anything and see if we can get you more years with less price. We do that often. Reason to own it: provides a death benefit proceed in case of an untimely death. A lot of people, the number is like 3% of people when they have term insurance actually pass away. 3%. But it's very critical because it's a younger family usually dependent on that, right?